why do we have deferred tax liability? As I said, uh, in certain cases, let's say for example, when you purchase an asset, the rate of depreciation on an asset under the Companies Act and under the Income Tax Act are different. Under the Companies Act, you can have a written down value method or you can have straight line method. Under the income tax, you only have one method, that is written down value method. Remember, even in case of written down value method also, the rate of depreciation under the income tax is higher than the rate of depreciation on the written down value method under the Companies Act. So what happens, since the rate of depreciation under the income tax is higher for WDB, initial years you get more depreciation under the Income Tax Act, and that is why, since you are getting more depreciation under the Income Tax Act, your taxable profit go down. Since your taxable profit go down, you end up paying smaller amount of tax. So because of this extra depreciation that you are getting in the initial years, you are saving tax. But remember what is going to happen as the time pass by. So what is going to happen is your depreciation under the Companies Act is going to be higher in the years to come, and your depreciation under the Income Tax Act is going to be lower. As a result of that, in the subsequent years, your taxable profit is going to be higher and you are going to pay higher tax in the subsequent years, right? So since you are saving tax in the initial years because of the rate of depreciation, and there are many other factors as well, what is going to happen is you will save the tax in the initial year, but you will have to pay it in the subsequent year. So therefore, when it comes to the present, it is a liability. It is a deferred liability. It is a liability which is deferred for the future, and that is why it is referred as deferred tax liability.
So sometimes they have a equipment life